Tuesday, October 25, market analysis. Stan Ehrlich, good morning. 9 o'clock California time. We have new highs for the last full month. For the S&P 500, blowing up the chart full screen. Here's the bear market that we've had since the beginning of January of this year. Today, opened approximately unchanged, held, started a rally. We're now up almost 5 points. We were up 5 points. Decent rally so far. 10-point day is a fairly strong up day if it was up. So it's not out of the question. We've had several days that are in the area of 10 points up and down in the last month from the previous close, let alone one day where we had 18 points or so on October 13th from low to high in the same day, which was, of course, the October low and a gigantic ER bullish signal, Ehrlich reversal bullish signal, which is a combination of a custom relative strength oversold condition and a custom bullish candlestick, engulfing candlestick. Okay, so we've got the October lows set on October 13th. I'm pretty positive at this point that we're not going to be challenged in the remaining number of days in October, which would be 4 more days, Wednesday, Thursday, Friday, and Monday next week. Pretty unlikely that we're going to go into new low ground completely in the next 4 days. It's possible, very unlikely. So, new highs for a month. Looking darn good. Very strong market today. 1 minute chart. We just made the highs just recently, 5-10 minutes ago. So we could have a minor pullback at any moment, but very minor. Half a point, maybe 2. But we're up 5. So we're holding a very good, strong ground. I don't see any technical resistance to speak of until we get up to approximately 387, another couple of points higher than today's high. So, yeah, today's high was 384, so about 3 points more than today's high. That would make it up about 8 points higher for the day. I'd be very satisfied with that. I think that is going to be our first stopping point for the moment. Maybe reached today, maybe tomorrow, about 307, but it's 387, but it's very minor. Maybe a nickel pullback, maybe as much as a dime during a day or two, or even intraday, inside one day, and then new highs. My minimum upside objective on this head and shoulder bottom pattern that we have formed during the month of October mostly is between 403 to 410. Now, it's not impossible that we can get stronger than 410, but let's get to 403 to 410 first and see how we do it if I need to extend the upside objective even more. I don't think so. I think that's pretty much going to be up, and I think it's going to be sometime in late November or early December. So a month or two from now. 403 to 410. We're not quite oversold yet. We're getting up to 69 almost on the RSI. My overbought levels did I say oversold? I'm sorry, I think I did. We're not quite overbought yet. My overbought level is not 70, it's 75. I like a little bit more extreme. So another day or two like yesterday, and one of those days could be in progress already. Again, we're up 4 3/4, and it's still early in the day. Only been open 2.5 hours. So, I like what I see. No problems. Forecast is coming true. We got October lows, and I'll show you that chart for the weekly data on the S&P 500, Spider SPY. Smack dab in the middle of October, we have the low, and it turned yellow because it was oversold on weekly charts, which doesn't happen very often. So we're getting our rally, It's looking darn good. A new high for about a month. No resistance, super close. But once we get up toward that 90 level, we now have another level of resistance around 90.01 or 391. But that remains, let's get there first and see what it does. So I'm bullish for a while. I believe this is a long-term bear market still in progress. My ultimate downside objective is approximately 320. That's my minimum long-term, and I started talking about this in the first couple of months of this year, many months ago, is 320. And I still think we're going to get there, but we're going to go up to about 403 to 410 first. Okay, let's look at the, whoops, I did it again, a little bad habit there. Let's look at the DIA, the Dow Jones Industrial ETF, Exchange Traded Fund, new highs for a little bit longer time frame. It started to accelerate in new high ground for over a month, a week ago. It is not a head and shoulder bottom, it is a double bottom, and a nice one. So I'm looking for a minimum of 322, plus probably another 5 points, maybe 10 above that for my 1 to 2 months from now bullish upside objective. We're already halfway to the minimum because the DIA has been accelerating much faster. The Qs, QQQ, the NASDAQ, like the spider, has made an attempt to make a new high for a month. Not quite. I don't think it's done it. It's come extremely close, but in the next hour or two, I think will have done it. And the head and shoulder bottom here is working just fine. The only regret I've got is that I thought it would be this coming Wednesday, tomorrow, for the last low. Instead, it happened on Friday with a bullish engulfing, and up we go. Worked out great, except the timing was a little sooner than I thought. So, liking what I'm seeing. Nothing's wrong. I got elbow room above the market. Everything's just peachy keen at this particular point. I showed you the October series of lows a year ago. Every year in October is marked with a green vertical bar just under the price action. And I'll shrink it even more so you can see a lot more years. By the way, if you were interested in this chart, I could send you a copy. You just have to figure out how to get a hold of me. The bond market is now starting to cooperate. If you had listened to my recordings the last few days, you would have been informed that the 10-year note was getting oversold and the bond market was oversold, and for 5 days in a row as of yesterday. Now today we're starting to get out of that condition. We're rallying up almost 2 full points, up 1.31 seconds at the second. Let's just say it's 2 points higher on the day, and this is now above yesterday's high and approximately the same as the day before, which would have been last Friday. I think this rally can carry further. Why is it important for the 10-year and the 30-year to be bouncing up on the futures charts here? Because that means bank-to-bank short-term, extremely short-term rates have started to slip a little. And that could be a precursor to more important rates on a much longer term basis, but we don't have good enough evidence for that yet. Let's go look at some futures contracts. I will start with the E-mini again because that is a futures contract, and we had a great buy signal at the bottom of the market, of course, and that's the bullish engulfing on October 13th I showed you on the spider ETF. Same signal, same day, same reason, everything basically the same. Doing very, very well. Head and shoulder bottom. I didn't outline the pattern on this particular chart for you. Next chart. Now overbought as of yesterday and this morning at slight new high in live cattle. I expect it to drop back down to around 149.60, maybe a little below 150 basically. And I can't rule out 146-ish. But this is still a bull move. We did test some significant historical resistance. The tops that we had made back in February, don't think that's going to stop this bull market completely. I do want to point out we got a bullish signal smack on the bottom of the break on September 29th. Gotta love that buy signal. Next, this is the 30-year long bond. We got a sell signal back on August 2nd, and we're getting a rally today, and we did get above the day before yesterday, Friday's high, a slight bit, and that's good. We're coming out of the oversold condition. This rally should carry a bit further, probably up to 124 minimum, maybe a couple 3 points higher than that even. That's not bad. That's pretty good. I'm not sure that the bear trend is over yet, but a rally and a bear trend is what I'm looking at, and a good one. Next, soybean meal. Not much to say. Got a buy signal at the bottom of the break. Didn't go too far. Pass. Next, sell signal a few days ago. Heating oil, smack on top of the market. And I might add, isn't this great? A double top over several months, and the previous high back in June also had a bearish engulfing ER sell signal. It's red, smack on top, the high day. And so far it happened again. That's what the signal automated, 100% automated trading system is built for. Picking market tops and bottoms, often to the exact day. Next chart. Platinum. Yeah, I don't have too much to say here. Got a couple of okay sell signals lately. Didn't produce big moves down, but profitable. We did get a sell signal on top of the market way back in March, the top of the market. Next chart. So I ain't got much to say about platinum at the moment. Crude light. Sell signal a few days ago, hasn't come down too much. Bear trend seems to be intact so far. We really need to get down to in the 70s, below 80 in the next few days, or things could be changing. I don't want to use the word neutral at the moment. I still think we're going to see lower levels and new lows for many months, probably in the next couple of weeks. Next chart, the Dow futures, the YM. We had a buy signal, of course, at the bottom and the first low of the double bottom. ER buy signal in green. And now we have new highs for the move up. And the DIA is actually doing a bit better than the NASDAQ, the slowest of the three, and the S&P is in the middle. It's doing very, very nicely. New highs for a month on the spider. Next chart. Bean oil. Soybean oil is getting overbought for the last few days. I expect it to turn down any time now. Plus, it's up against some resistance. So I'm expecting a minor downside retracement to approximately 868 or lower, but not necessarily a bear trend, but a minor correction I'm calling for at the moment. Next chart. We got sugar. Bearish engulfing on the top, almost the exact top. And it has been down every single day since then. 1, 2, 3, 4, 5, 6 or 7 days in a row. Except today is higher than yesterday at the moment. It's not closed yet. Not even oversold. So I am expecting to see lower levels. Let me get rid of a little alarm here, people. I'm sorry about this. There we go. Thank you. Sorry. Apologize. Going back to futures. So sugar, a little bearish short term. Next, we got cocoa. No signals lately at all. Matter of fact, not producing very many signals at all, period, since, the end of last year, a full year. What have I got? One? It worked a little bit. Wow, that's about it. Pass. Next, rough rice. Nothing here either, except it's oversold. Don't go selling markets short when they're in oversold conditions. You're asking to sell the bottom, and you'll get caught by buying the top to get out of a losing trade. Vicious circle. Don't do this. Look for overbought and oversold conditions and use the tool to trade in the proper direction. This should be a buy either now or very, very soon for a short-term rally. Next, coffee. Oversold, same commentary, looking like it's gone down too much, too far, too quick. Nothing particularly great as far as signals are concerned, but look how often my price action turns yellow at the turning points, meaning it was oversold here and here and here and overbought here and here and here. And I also got bearish engulfing ER red sell signals on these two highs, as well as being overbought. Next chart is soybeans. How big sideways trading range, very neutral for the moment. Don't quite know what to make of this. Looks like something called a diamond formation, but they're very rare. Pass on that. Not likely. They can be top formations. I don't see anything to scream about at the moment. Neutral. Next. OJ. Overbought. Too high. Too fast. Probably going to come back down to 160, 170. Maybe a little below 180 real soon. Next. Gold. Double bottoming out. We had a bullish engulfing ER buy signal smack dab on the bottom day back on September 28th. Then it produced a double bottom formation because the low 3 days ago, 2 days ago last Friday, was almost exactly the same low. So it's about a 3-week double bottom formation so far. You need to get above about 1,741 in order to break out of this double bottom without making any other new lows in the meantime. And then you'll have an upside objective of approximately 1850. I like this, the way this is shaping up. I wished I had gotten a buy signal last Friday, but it was a bullish engulfing, but not in oversold condition. Very close, but hey, didn't do it. Next chart. Live hogs. Hey, today. Live on stage. As the day is progressing today, we have a bearish engulfing and overbought conditions. This is a ER sell signal happening as we speak. Now, it needs to close below yesterday's closing price in order to keep the bearish engulfing sell signal. Otherwise, it disappears. So, assuming that the close is going to be below yesterday's close, which was 87.92 and a half, 87.92, and we're currently 87.80, so not a lot below yesterday's close. Assuming it stays below yesterday's close, we've got a sell signal today. How much lower is it going to go? Good resistance at the highs, some historical, some relatively recent, only 2 months old, with a bearish engulfing, I might add, ER sell signal. I think it could come down to 80 again. Maybe between 75 and 80 again. That does not seem to be out of the question. So this is great. Live hogs in progress today as we speak at the moment. Next. High grade copper. Neutral. Had a buy signal. It worked. Nothing particularly spectacular. Next chart. Silver. Also neutral. Not providing particularly great signals one way or the other recently, and I mean in the last year or two. So I have to beg off on silver. Nothing particularly great in terms of the actual green or red bullish or bearish buy signals or sell signals, the ER. Next, we got oats, oversold, probably too much too fast on the downside. Going to rally a little bit back to resistance of 366. No big deal here. Wheat. I got to point out, people, that I believe when the war started, I think it was back in March, February, March, wheat got caught up in it and went screaming higher. Limit up bid, limit up close, opened high-low close limit up, locking limit up all day long for the last 2 or 3 days. Finally, we had a bearish red ER sell signal on top of this incredible straight up, the fastest it could go straight up, bull move from about 890 all the way up to 1400. I got a sell signal on top. I also got a sell signal back on May 24th. It worked very nicely. Right now, I have to be fairly neutral on it. But wow, what a sell signal. What was the date again on that? One of the more spectacular ones, March 8th this year. Next. We've got corn, neutral, next. And we've got the 10-year notes. I got a couple of trades here with the ER3 trading technique, actually showing you the signals and their trades with the trailing stops. Whopper lasted quite a number of months. Looks like it, well, I don't know offhand. You count the numbers, they're great. And then recently I had a small losing trade for about 3 weeks. Right now flat, waiting for a new signal. Next, natural gas, sell signal on top again, people, the high day. And that was August 23rd, way up at 10 something, 10.5. And we're now down at what? 5.5 yesterday. And oversold. So after being oversold for a few days, making new lows again and again and again, we finally have a day up today. It'll rally a little bit more. I'm thinking up to about 7.0, possibly a little bit more than that. We have a downside breakout for 2 or 3 days in a row, so I think this is a bear market in progress. Next, back to the E-mini, where we started. Forex final. The euro dollar, for those of us who love to go to Europe in a few times, really like it, and trying to get back again, I think I missed the bottom of the euro. It happened on September 28th. Bullish engulfing ER buy signal in forex, the euro dollar, and at the same time, the DX, same day, gave me a sell signal, as you might expect. And I've gotten some pretty good signals out of the ER system in the forex markets. You guys have a great day, great trading day. See you tomorrow. Oh, hey, also, the Foundation for the Study of Cycles, nonprofit organization you should visit in order to find out a lot more about rhythms in the stock market, commodity market, forex, economics in general, and a heck of a lot more than that. Rhythms are a natural phenomena. They're all around us all the time. And we're making good progress with the ninja charts, which I will be using soon to show you the ER signal. Now, have a great trading day. Thank you very much. Bye.